All right, what's up, everybody? Welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent and higher probable entries to help you all become better traders. Today, we're going to take a look at Bitcoin. We got the dollar flying to the moon. A couple other things happening this morning. The BOE just came out and said that they're expecting a 2-year inflation, potentially starting now. That news has got Bitcoin looking for lower prices. We also had the Fed meeting yesterday, the FOMC, in which we streamed live. We were basically listening to him as he said that, what they were looking for as far as a soft landing is concerned, that is getting more narrow as we move on in time. So basically, they're going to keep hiking rates. So everything a little bit more bearish for the markets today coming off of yesterday. Bitcoin gave us the absolute perfect short this morning. So we took that. We'll discuss that trade entry. But right now, for any Bitcoin bulls out there, understand that being bullish this market is the contrarian view. 90% of almost everybody is bearish in this market. So if you are looking to be the contrarian, you are currently testing a massive level, meaning it's August's close, or also known as demand. You also have monthly support coming in at $19,985, just under there. So if you are a technical trader alone, you are going to ignore the news and take a long position down there with a suitable risk management, and you'll see what happens, right? Nobody knows what is going to happen ever, but let's go ahead and kick off this analysis. All right. Thank you all for being here. Very, very kind of you to join us. Let's go ahead and see what we got going on here. So basically over here is going to be the monthly chart. I have it stretched out so you can see the levels. That's old monthly support. You essentially broke down and closed under it in September. And then last month we had a bullish close back above the level. So technically, as long as you're trading above $19,985, I think you can look for bullish entries. Another massive thing of note, we just had a fresh monthly open, being November, and for the entirety, well, except for a little while yesterday, for the entirety of the 3 days here, you've been pretty much bearish. Even yesterday closed bearish. So for the first part of the initial monthly expansion, we have a move to the downside, and it did in fact check monthly demand, which is August's close and then September's open. But that is a demand level. Since you closed above it last month, one could argue that the November candle has came in to test this to see if there is buyers there. Now, naturally, we don't know if this level is going to hold, and it would take a full month of time to wait to see how this monthly candle closes in respect to this level, but it is a great, big, gigantic technical level. And if you are a technical trader, then no matter what is going on out there in the news, you essentially would take that position, because if you have sound risk management skills, you're not going to lose much more than a couple percent on the test of the level. Now, with that being said, yesterday we took a very profitable trade. This morning we took a very profitable trade, and the day before yesterday took a very profitable trade. So, I mean, we do have a little bit of money in the bank that we can afford to risk a couple percent on. All right, so let's go discuss this entry on the short. When I woke up and came to the office this morning, at the London session, you set the high of the day right in here. This is your London session open. There's your midnight candle, 1 o'clock, 2 o'clock a.m. That's the London open. So you had the high of day. You traded away from the level. So that would have been your signal. If you are indeed following the strategy that I freely give to you all, you would have been looking for a potential entry right there upon a retest of hourly supply. Why would you done that? Simply because yesterday you were bearish. Yesterday you closed bearish. The day before that you closed bearish, and the day before that you closed bearish. When I looked at the computer screen this morning at 6 a.m. when I get to the desk, we were right here. I took the short entry based off of hourly resistance right there. And then when we broke down here, I took profits. All right. So, yeah, that's where we currently sit. That was a nice profitable trade there. Currently, we're going to watch the August close as that is demand, and we want to see if it holds up for today or not. You have already gotten 2 bounces there. Last hour, we closed, or not closed, but we broke down below the previous low of day. This was your previous low of day. It didn't take very long for you to go back there, set a new low of day, and you are currently getting a bounce. Now, here's the thing, guys. It's very bearish out there. So, yeah, it's the contrarian trade. That's all you can say, right? That's all you can say. It is a big technical level, but whether or not people are going to step up and buy it are 2 different things, and we will have to see what happens. All right. So we'll keep our eyes on it this morning. Another thing of note, when we were making this push here, right through there, that bullish impulse, everything else was bearish. The S&P 500 did not make this bullish impulse for several hours, and the DXY did not make a bearish impulse for these several hours. So to me, this was just a phenomenal, flawless, perfect, almost like as soon as I seen it, I took the entry, right? It's one of the most straightforward trades I've seen in a long time where it wasn't like, I don't know if it'll work or not. It was one of those like, oh yeah, I'm taking this. This is a no-brainer, and ended up working out perfectly. I just had my risk right above that stop. So you can see it ended up being like a 4 or 5 to 1 risk to reward, probably a little bit bigger if we were to put our stuff up there. Target was the daily open, because at this point in time, you were bullish on the day, right? Because there's your daily open. You traded up, set in a daily high, and then the expansion rolled right back over, creating a new and fresh daily low. This would have been your daily low right there. So on this push lower, you took that out. Currently, we're coming into the open right now. So that is why you are seeing this act as resistance. All right. Day traders, and especially day traders, they're putting orders there. If they feel like they missed the short, and the short is, definitely in play today, they're going to be looking for new entries right there, looking for a massive expansion to the downside for the daily range. You have already gotten that pretty good size expansion on the S&P 500. You can see here it did have a slight bullish move coming into the London session, but nothing like Bitcoin did. Bitcoin essentially traded all the way back up into the newsprint. So it was a phenomenal setup. And then if you go look at the dollar here, you're going to see just a slight little dip. Nothing compared to what Bitcoin gave. Just a phenomenal setup. Over here on the dollar, I have 2 technical levels. You have weekly resistance, or old weekly resistance, because this candle was a trap since you took out the high of it and then closed under the low. So if this is going to be resistance, this is the last place I would expect to see it happen, right here. All right. I didn't want to see it get above last week's open, but not only did we get above last week's open, we also took out last week's high. So you have a lot of bullish momentum on the dollar right now. I don't suggest looking for fresh shorts right here, right now. We're 8 minutes out until the New York stock market open, so we'll see if sellers step up here or not. If they do, I would expect them to start doing it quickly. I think that your weekly range, since today is Thursday, is naturally going to be up. So you're stepping in front of a lot of momentum. And then here is your weekly expansion on Bitcoin. You can see here it is early in the month, so we might not have set the monthly high or low just yet. But there it is looking more and more like there's a possibility that move we seen yesterday was going to be the high of the month. Or at least a lot of people are going to treat it as such, right? But we'll see what happens here. So right now, this is what your weekly expansion looks like on Bitcoin. Once again, you're on Thursday. So the weekly high is probably in. So this is likely going to close as a bearish week. Doesn't mean it will. It's just more likely, right? The probability suggests it will. But to be honest with you, a close above this monthly support level on this weekly close on Sunday would look bullish to me. It would still look okay. All right. It would still look okay. If we break down below here, you're going to see a pretty big move to the downside because a lot of people are potentially taking those positions right now. Right now. So yesterday's close, also today's open. That's why you're seeing more sellers step up here intraday, right? Intraday. The natural short trade would have been a test of the previous day's open. You didn't quite get that, but it did give us a nice pullback to get short. But in my opinion, the short trade on the day is done. Will it continue if you have taken the short at the open? It's possible. It's possible. Anything is possible. All right, so I'm going to tell you that there is a link in the description for the Bitget. It's the platform on which we take our positions on. We trade the inverse swap contracts, so that way we can accumulate more Bitcoin. And you can do that if you want to use the link in the description. There is a code that you must use as well. It is XTSC. That's X-Ray Tango Sierra Charlie. If you want to give them a shot. They have the less or the cheapest fees in the market. So that's why I'm trading on the platform currently. And they have great executions, no KYC, all the good stuff you look for in a crypto exchange. All right, so that open is going to be $20,151. So let's drop back down here into the intraday charts so that way you can see kind of what's going on here. Sellers will be trying to add here. I don't suggest you do that. Like I said, the short was earlier today to capitalize on this expansion. But it does look like people are stepping up to buy the August close, which is monthly demand. If you were going to be a buyer of the asset, down here is where you would want to do it. All right. We never know if we're going to get a fresh low of day like this, but if you do notice how like you did get that initial check of it, then a big bounce. This big bounce right here will cause people to FOMO into the position, and then they will just stick their stops right there. That's why occasionally, an hour and a half later, you'll see another run back below the lows to get that one final shove under there, generate the liquidity from the early buyers, and see what happens. You're going to need a lot of big buyers here in order to keep price moving higher. And like I said, there's not a whole lot of stuff going on that is suggestive that we should even be buyers. Here is that price down here at 365.41. As long as we're trading above that on the S&P 500, I do think there will be a little bit of support there. If we get under it, then that in itself will cause massive selling pressure because we do know that there were big positions taken here. So, yeah, keep that in mind. And the closer we get to it, naturally, the worse it is for bullish people. Anybody that is bullish, we're day traders, so we can be bearish and bullish each and every day of the week. We can change our bias because all we're looking for is the intraday opportunities. As an investor, we would love to see the lows in, but with what we heard yesterday in that speech, it's just not likely anymore. Getting long is the contrarian trade. That means you are looking for all the shorts to get stuck. And if that occurs, we will see a nice rise in price. Good morning, everybody. Good morning. Still thinking about the guy who told Jerome yesterday that stocks were going up. They did go up for a little while, right? We knew that there was a rally. We traded the rally. We were long for the rally, but we also knew that we were coming into an area where that rally could end, essentially waiting on the FOMC meeting. I mean, and if you look at the S&P 500 on a daily closing basis, yeah, yesterday was nasty. Yeah, I mean, it is what it is, right? Big strong close last Friday. It's essentially just a trap. That would have been your bearish entry, even if you were looking for entries. we're kind of looking for that to play out today here on NZD Swiss franc. It is playing out, but I'm not getting the expansion that I expected off of it. The asset on the daily time frame is bullish. If you pull up your RSI, you're going to see that you're well above the 50 level, which just separates the bullish from bearish price action, right? Anything above, we consider that to be bullish. Anything below 50, we consider that to be bearish. That's all. It's just an oscillator that shows the momentum in the market. And this asset has been a little momentous to the upside. The only reason I was looking for the short trade today was just because resistance held 2 days ago. Yesterday, you closed back under it. Even though you traded well above it, you closed back under it. That's a pretty decent short signal for me. So I took the entry there, even though it is structured bullishly, but it was just for a day trade. All right, just for a day trade. So it's a very, very small FX trade that was successful. It's all I had, right? Everything else had already made massive moves this morning in the FX land. It still isn't, have we made a fresh daily low? Yeah, right? Well, no, not yet. There's your fresh. That's going to be your low. Sorry. Apologies. Here's the open. Right there. That's going to be the daily open. So resistance is the open. So that was my entry right there on that white line. As price starts to push lower, you got to take profits because the asset overall is bullish. Right? Nice little double bottom down there. So potentially you could see a spike down to there. And then that's probably as far as I would expect it to go. And that was it. Like I said, everything else had already made a big move. Look at that nasty thing right there. But here's your hourly time frame. There's your euro, just getting pummeled. So bear market rally, almost confirmed. If you go from high to low and use the fib from swing high to swing low, you're just now coming into the 618 retracement of this expansion. And I do mean from your bear market low down here to this bull market rally or bear market rally. You're coming into the 618. So, I mean, if people are expecting this to become bullish again, they will be looking probably here. But, I mean, you're trading under support. You're trading under parity. You're trading under a few key things that I would have wanted to see it stay above if it was going to continue to be bullish. So that USD trade, USD JPY trade, if the dollar keeps going higher, there is a possibility that this thing gets stopped out. I am positioned nicely for it, but hey, it is what it is. We already got paid big time on that trade. So we're sitting pretty. I mean, the account's growing daily at this point, and it almost is getting too easy. But I don't want to say that because it sounds very cocky, but this morning's trade was very simple, very easy, very simple. Your run-of-the-mill short setup. I mean, it was beautiful. Like I said, when you have your supply, you don't want to try to sell, right, when the market's pushing up because you don't know what level the market will potentially respect, right? But when you get to a significant level and then you have a reaction like that, you just know to watch supply. You just know. Just watch it. If you get a retest of it, you can take the entry. Stop above the high of day. I mean, and that was a nice move. I mean, you ended up getting a pretty decent expansion from there, right? Simple. I wasn't awake during that time, but if you follow me and if you watch my live streams more than a few times, you have probably heard me say the London session usually sets the high or low of day. So if you're trading at the top of the daily range, which you would have been up here, then there is a pretty good chance, you would have been trading at the top of the daily range. At 2 o'clock in the morning, you know that oftentimes the London session is going to call a reversal. And it did here. So, boom, straight down. For the bulls, you got to get back above that. You don't want to see a close under here today. If you see a close under here, then it's going to be bearish. It's going to look bearish, and that's just going to bring more bears into the market. Right? We shorted it today, but we weren't looking for a massive bearish breakdown. We were just looking for that little tiny move. We try to catch the meat of the move, if you will. Good morning, car thieves checking out my wife's car in the dark an hour ago. Little do they know, I get up at 5 a.m. for trade talk. Nice. Nice. Take a BB gun and stick a pellet in their ass. That'll keep them from coming back. No, don't do that. There's probably a, you'll probably get sued if you do that. Gotta love thieves, right? Gotta love them. All right. So basically, we're just going to watch that this morning, see if that monthly level does hold. It is a big, big, big level, right? So I do expect there will be some buyers there. I went ahead and took the position because like I said, I can afford to lose 2% if I'm wrong. But actually, it's already getting up nicely, so wouldn't be a bad idea for me to go ahead and take some profits and then just move the stop to break even and see what happens with it. Just let it ride, as that is the strategy. Get in, get what you can, get out. Or at least get your risk out. Leave some on, because that's the bank's money. We want to play with the exchange's money, not your money. Right? Let me do that real quick. 20185. All right. So moving on. Yeah, that's what we're gonna do. We're gonna see if it wants to bounce from here. That's a pretty nasty move. This is going to be the open, so let's mark that with a TO, 2 days open. So that way you don't have to guesstimate what that level is. You know what it is. Right? Today's open. We want to see it stay above that. All right. Good morning, Heath. Good morning. Good morning. From a bright, sun-filled Ireland. Beautiful country. Beautiful country. I know it stays wet and cold there a lot, but man, they got some of the best ocean scenery scapes that I've seen in the world. Nice green pastures overlooking a mountainous rock cliff going straight down to the rocky shore below. Beautiful. I'd like to go there once. I've never been. I would like to go. Good morning, Heath. On the USD JPY, was there a short at 148.291? The short this week was going to be weekly resistance. Sorry. Right there. It did give you an opportunity early in the week. Right here. But you can see yesterday, the FOMC meeting brought those dollar buyers right back. Brought them right back, man. So if you are looking to take the short here, please understand that that FOMC rate decision was bearish. They are going to continue to be hawkish, right? And hawkish means that generates alpha for USD long positions, essentially, in two ways. One, it's the world's reserve currency, so naturally people just want to be long dollar anyways because of that. And second, the raising of interest rates generates alpha for the dollar. It's raising the rates. And if you're taking the trade for the interest rates, it's called a carry trade, then yeah, long USD JPY makes a lot of sense because the JPY's interest rates are below zero, whereas now we're up at 4% on the USD. So just getting long USD JPY and holding that is a carry trade. You're just looking to generate alpha from the interest rates alone. So I don't know if I would want to get shorted. I shorted it based on BOJ intervention, and I think that the BOJ will intervene again, but they're not going to intervene again at lows, right? They're not going to do that unless the market starts going up higher again. They'll do it at highs, not at lows. So what I was hoping would happen is that the Fed would come out yesterday and say, yeah, we're only going to rate hike 50 basis points, as we think, we've done enough for now, or we want to just wait and see what CPI looks like next week. Then that would have been very, very bullish for risk. But that's not what happened. So you do have to kind of take what he says and understand what it means. But still at the same time, there is such thing as a contrary trade, right? Where you take the opposite side of the market. Everybody's bearish right now. I'm talking everybody. And especially since what he said yesterday, right? Now you have all these macro analysts on Twitter dissecting what he said and then throwing out there, talking about how the markets are going to go back down again. So taking the long risk trade is very contrarian. But I mean, there is not really a technical level. There's your weekly resistance there. I guess one could look for, well, daily resistance is also going to be there. So, I mean, right now, the only part of resistance that you could be dealing with would be yesterday's open. So you did close 2 hours above it, but now you're kind of coming back down. See how this hourly closes. You got 20 minutes. If you close like under, then you could potentially take a short trade at the supply, which would be that candle right there. Does it mean it will work out and you will make a lot of money? No. It's just a technical setup, but it is on the contrarian side. Let's pull up Daily Effects here because they're a good website. I like their economic calendars and I like their sentiment meter, right? So you can come over here and find USD/JPY, and it says 66% of clients are net short. So now it has switched. Remember, it was like right at 51% were net long. Now that position has changed because retail is constantly trying to pick tops. So now it has went right back to where 66% of their retail clients are net short, and they know that, their data shows that 74%. Oh, I'm not exactly sure what the exact numbers are on IG, but let's just say roughly 80% of their traders lose money. So if 66% of their traders are short and 80% of them lose money, the contrarian trade on USD/JPY would be to be a buyer right now. But sometimes retail is correct. They aren't wrong all the time. So it's up to you if you want to take it. I assumed once you got the blow off with that intervention, I assumed that a higher or a lower low would pull in more short traders. I was hoping it would pull in more, firms, hedge funds, and stuff like that, not retail. If retail is looking to short it, it really breaks my heart. Right? But I'm going to hold the position because I have a phenomenal position on it. And like I said, I have already taken money off this trade. It was the best trade. Like, I made more money on that one trade than I have like almost on everything else all year long. It was a phenomenal trade. So I'm situated perfectly to just hold it and only risk the bank's money. That's the bank's money. It's not my money. My money's already put up. It's already in the account. What I'm holding here is just unrealized profits. So I'm willing to hold that position, but I'm not going to short it again and lower the cost basis. It could hold. If it could hold, but we'll see how that ends up playing out over the long haul. That's going to be more of like a position trade for myself than it is just a day trade. Yeah, I did get filled on that take profit limit order right there. So nice. That's go ahead and move that stop, and we'll see how it plays out. But I still am also holding the short position on the main account. So just the unrealized profits though. I had already taken profits on that. I have already got the stop moved to break even. It was a 28% gain. So that's another feature that I absolutely am beginning to like a lot on the Bitget platform. Yeah, very much so. It's almost like hedging it off. You wake up often to trade the London Open. I never wake up to trade the London Open. That is 2 o'clock in the morning for me, and I value my sleep very much so. I do not wake up to trade the London Open. I have before, but like if I'm having a difficult night with sleeping or something like that, if I wake up and I can't go back to sleep, yes, I will absolutely come to the desk. But if, most of the time I just wait to the New York session. The New York session has proven very profitable. You get plenty of setups in the New York session. Sometimes in FX land, you'll wake up and there won't be a setup on the FX side, but there's typically always a setup for Bitcoin in the New York session. But if you live in the part of the world where you're naturally already awake for the London session, then yeah, I strongly suggest you look to trade that session. It's the session where most of the volume comes in on the daily range. All right. But I'm not doing it. not every morning. Yeah. Have you heard of GMX? It's a perpetual exchange built on Arbitrum, fully decentralized and up to 30x leverage. No, I have not, Igor. I have not. Do you think hedge funds or smart money manipulates price in the pre-market? For example, yesterday pre-market were up, and as soon as markets opened, they sold off, fooling people to create liquidity. I don't look at it like that. Is price manipulated? I'm sure it is. Or the liquidation break strategy wouldn't even be a thing. I'm sure it is. I'm sure it does work sometimes, but it's just, to me, I look at price and as the way it's delivered to be differently than the way a lot of other people look at it. I think that price is just bouncing back and forth from supply to demand, searching for liquidity, right? That it's actually, I don't think that people are buying it down here, and that's what's causing price to go up, right? I think price comes down here, tests the liquidity, tests the demand, and then if there is a bunch of demand there, it will rotate away and then start to move up to look for supply, because the price oscillates, right? If it was just as simple as, buyers are just pushing up price, then they would be able to push it up and push it up. And if that is the case, I don't understand why people think that. Why would you buy an asset to push it up if you intended the market to sell off? That makes you're taking the position on the wrong side of the trade. Like if you do have enough money to where you do affect price, right? Why would you buy the market and because you're looking to sell it? It doesn't make sense. It's not that's I just don't think that's what's going on. A lot of YouTubers talk about market manipulation and market makers and all that stuff, and it's just because they're ignorant. And I'm not saying that in a disrespectful way. It's just the only word I can think of to describe what's going on. They're ignorant to how the mechanism of price actually even works. Like, for instance, market makers, especially arbitrage market makers, they don't make money on price fluctuations. Like, they're not making money if price goes up or down. Therefore, they don't give a shit about your stop loss. They don't care. They are making money from buying from this exchange and selling to that exchange. that's providing liquidity to the market. So like when you look at level 2 data, for instance, and you say there's a big buyer stepping up at the $2,000 or $20,100 level, that does not mean that it's someone taking a bid position. It doesn't mean that. That could be someone exiting a sell position. That could be a profit-taking position. So it doesn't necessarily mean price is going to bounce from that, because liquidity is coming in from different exchanges, right? Buy from here, sell to there. So like if there is a spread on the price of Bitcoin, for instance, well, here, let me do this. So let me pull Bitcoin down here, and then let me pull Bitcoin up on a different exchange. Let's get Bitstamp, for instance. Oh, wait, I need to do it over here. Add Bitstamp. All right. So right here are your exchange prices, right? When it flashes red, that's the ask. When it flashes green, that's the bid. But you can see that they're pretty damn close, right? $20,171, $20,172. In the beginning, when Bitcoin first started up, when you had, a few major exchanges, you could see a premium, just the difference in price right here by $200, $300, $400. So that means if you have something lined up with Bitstamp, I'm going to buy 100 Bitcoins at this price, and then I'm going to sell them to Coinbase to generate that alpha, because Coinbase is offering on the ask Bitcoin for $150 more or $500 more or whatever it used to be, right? That's the money they're making. That's not affecting price at all. What that does is it eventually brings that spread closer and closer together, right? So now you can see that edge, that arbitrage edge, is almost completely priced out of the market. See that? Now the prices are pretty damn close. There still is an edge there, $4 or $5. There still is an edge there. And they don't do that manually. They have software that does that, 50 billion times per second. You couldn't do it physically or manually, if you will. You got to have software for it. So, but like that's an example of what market makers are doing. So by doing that, by taking liquidity from Bitstamp, putting that liquidity onto Coinbase, that now gives us as retail traders the ability to buy and sell pretty much at any price, as long as price goes there, right? As long as there's thick liquidity in the asset, you can sell, you can get instantly out of your position. Whereas in the past, before market makers were so prevalent in this industry, or even today, you can still see it in very low cap penny stocks. I mean, very low cap shitty penny stocks that aren't never going to do anything. When they get a lot of momentum because of a news driven event, then you'll see a lot of buyers come in. But if you've ever played with penny stocks, especially the cheap ones, you'll know that occasionally you're going to buy an asset and then you're going to hit the sell button and nothing happens. And the reason nothing happens is because there's literally nobody on the bid at the price you are asking for. So if you're trying to sell it for whatever price, if there's not a buyer there at that price, you're not going to get filled. Well, market makers provide the liquidity so you can just get in, get out, get in, get out, right? That's what the majority of market makers are doing. They're not triggering your stops or looking for your stops. Price is, right? Price is looking for your stops. But you can trade that. Like, if it happens, and it happens to you a lot more than, say, your position or your strategy actually wins, you're losing way too much because of, getting stopped out, then wait for the stop out and then enter the position. It's that simple. Like, that's how I even came up with this strategy, because I was watching it happen to me over and over and over again. And then I decided to stop doing it that way. I'll just, from now on, I identify the liquidity pools. And if I'm going to operate a position inside of a liquidity pool, I want to take it after the liquidation happens, not before, right? Or the way that I trade normally during normal market hours when there's not a heavy risk event is I'm aiming for that liquidity. So taking the short trade here and covering down here after a liquidation of the previous day's low or the previous lows, not the day's previous low. Okay, because I know there's liquidity setting under there. I know there are buyers setting there. I know they are. So I am using their stuff to exit my position, right? That's how I generated it. That's how I built it. That's how I trade now. I'm either taking a position aiming for a liquidity pool, or I'm waiting on a liquidity pool to get smoked and then taking the position, contrary to the directional bias. It's kind of difficult, but once you get the understanding of it, it's not, right? So as far as, am I right? Is that exactly how price works? I don't freaking know. You know what I'm saying? And I don't even care. I don't even care. All I care about is getting in, making money, and getting out. That's it. And I'm able to do that consistently, day after day after day, in some cases. Sometimes I take losing trades, though. Price doesn't do what I thought it was going to. You just got to make more winning trades than you do losing trades. I've been trying to short band USDT all day and got smoked. Let's go look at it. Band USDT. Been trying to short it all day and got smoked. Yeah, I mean, it's very bullish today. So typically you don't want to short the trade when it's momentous. If you are looking for this to be a selling event or a selling opportunity, you must wait for resistance to reveal itself. And that can take a couple days, my friend. So like the difference on Band and Doge is simple. Why am I looking for a short on Doge? Well, if Bitcoin's going to roll over and risk is going to roll over, then I think this would be the asset to look to short, right? Why? Because it's off the lows. That's why. That's it. But I'm not going to short it when it's having its momentous bullish up move. I'm going to wait for resistance to reveal itself. Once you have identified that or allowed price to do that, then you can go in there and hit it with the short hammer. Then and only then, but not before. Because before, you're trying to short the asset when it's uber bullish, right? You're going against momentum. And you don't want to do that more than once in a day anyway. If you're shorting something that's very momentous and you get stopped out, don't go and try to do it again. It's telling you that you're wrong. So like, I would be waiting for daily res to be tested again to see if it holds there. So in my opinion, the only short trade to take as far as dailies go is this right there. So you got to wait for it to get there. Then you must see a bearish reaction from there. Then you can take the short entry. Now, I have my setup at 4-hour resistance. Does that mean that I am going to take the trade at 4-hour res? No. There is 4-hour res. I will watch price there. So if you go back into it, you can see how 4-hour resistance didn't hold here. 4-hour resistance was made over here. But you traded up into it, well above it, but then you drop back down. There would have been the entry. After you get down under it, retest of it, then drop. That's your entry for the short. And you're not looking for it to go back to zero. You're only aiming for the daily open if the daily was green. If it was green. And in this case, it would have been green on the day right through here. You still would have been green on the day right there. because the open is what? Way over here. Well, yeah, you would have been barely green on the day there. But that's the area to look for the short trade, not just short a random 5-minute spike. That's not going to be a profitable strategy overall. You got to wait for that resistance to build into price. You have to see other traders, operating inside of those levels. If they're not, then that means looking for shorts is on the wrong side of the overall market. So, yeah, if you want a short one, short Doge, watch 4-hour resistance first. If you close a 4-hour above this white line, then the next area for short potential entries, right here, and only there. Not in between here. There isn't a trade to make in between this. So we haven't got it yet. It hasn't hit it for us yet. I looked at Doge when we were here. So we have not gotten a retest of 4-hour resistance yet. So I don't know, what's going to happen, but we'll watch it. Like I said, that's only if risk rolls over. If risk rolls over, then I am more than happy to take the short on Doge. Because the fact that it had a 100% move to the upside means there is a ton of meat on the bone for the short trade. I'm not looking for it to get all the way back down there. I will take my short entry, take my profits. If it does start to move in my direction, I will move my stop to break even, and then I will leave 1/3 of the position size on to see if it wants to get back down there or not. Like a probing position. I'm probing price to see what it wants to do with an entry. Yeah. That's what you have to do. Band is very bullish. It's very bullish today. Is it possible that it does find resistance today and rolls over and ends up red on the day? It is, but it's not likely. And there's a difference. That's not likely. I mean, this is a 12-hour candle. Look at this 12-hour candle. To be fair, you got 9 hours left on it, but it looks like people are buying the highs. Right? It looks like they see this momentum. They see this as a pullback. They're getting long, expecting continuation. You got to wait for that resistance to build in. There is a resistance level there, but will price respect it or not? That is the ultimate question. If price respects it, then you can look for short entries. And only then. That's how you wait on a setup. You let the setup show itself. Give it time, patience. Sometimes, like another thing that I did in my career as an early trader when I was trying to get good at it is I was taking positions a day early. Like I would enter the position and then I would be stopped out the next day. And then the day after, it would roll over and drop, right? So I'm trying to take a day trade entry on a position that didn't play out for 3 days. It took 3 days for the setup to play out. So it just means you're doing good at identifying areas where you should be trading. Now you just need to work on your patience a little bit more, right? And instead of thinking to yourself that you're going to make money on this trade, if you look at the trade and say, I'm going to lose money on this trade, how much do I want to lose? Well, that will help you be more patient and wait for the setup. If it's not there, you do not take it. You do not chase it. You do not take it, period. You never chase price because you're doing it wrong. If you're like, oh my God, it tested my level, but it's late, so I'm just boom, go short now. No, you can't not do that. That is a terrible habit to build. You wait for price to come to you. If there ain't a trade today, you don't trade today because you're likely going to lose money anyway. Everything is stacked against you to fail. And I think a lot of people get lost on that whole point. they're still looking at the market like they're going to make money. No, you're not. You look at it like you're going to lose money, then you become more patient. You wait for those setups, and you will have a much better hit rate. That's a promise. I can guarantee that. The less you trade, the better performance your portfolio is going to have. All right. So we'll keep Ben on the watch list. We'll see what it does. I mean, it's a decent move, but Doge is if you're looking to short it, this thing is up 76%. Doge is up 176%. There's still quite a bit of momentum in Doge, but it looks like that momentum is waning. And once again, if risk assets roll over and start making fresh lows, then Doge is going to be one of my favorite shorts to play because it's up 176% off the lows. All right. So watch Doge. Watch Doge and watch that 4-hour and daily resistance. 10-year rate skyrocketing. This doesn't look good. No, it doesn't. It doesn't. Look at the 2-year, bro. Forget the 10-year. Look at the 2-year. That thing looks like a shit coin. Look at that daily. What a breakout. 10-year, yeah. I mean, you're into supply, so we'll see if it holds or not. It's at this point with everything that we know, it's probably not going to happen. You know what I'm saying? It's probably not likely, but we'll see what happens. I would love to see this be a lower high, and I would love to see another expansion lower, as that would be good for long setups on Bitcoin and risk. But as long as this thing is pushing to the moon and the 2-year as well, yeah, it's the dollar is cooking right now. It's cooking with grease. Cooking with grease. We'll see if this weekly holds. That's, it's the previous week. If this trap is real, I mean, this is much bigger than I wanted to see on resistance. He really screwed that short dollar play. You know what I mean? It is what it is. He really screwed it. But we were aware that, it came into support down here, potential support, and it did hold. You tested it and bounced. And that brought the buyers right back. But it was based on what FOMC said. Based on what FOMC said. Bitcoin's bouncing right here. It's struggling to, stay above the daily open. It looks like it's a little bit weak. Tomorrow we have non-farm payrolls at 8:30 in the morning, so we'll be going live at about 8 a.m. and let's see what happens then. Let's see if buyers come back. If we get a lower unemployment number, then it's going to be bearish, more than likely for the risk markets. So like this number here, if we get, another lower tick like 3.5 and under, that's probably going to be bearish for the markets because the market could decide that that's uber bearish. That gives the Fed more ammo to continue to hike. This is what they're kind of watching. As long as it's low, they have a target of 4 point something percent, which is where they want to stop raising interest rates. As long as you're trading as long as it's under 4, they have room to hike. And that's why he said yesterday, we still have room to go. Right? So the next time we see the FOMC, we'll have two NFP numbers, and we'll have 2 CPI numbers. And both of those numbers will be important. They might still do a 75 basis point hike next month or in December as well. Just go ahead and all of 2022 will be just a rate hiking craze. And going into 2020 through 2022 will give us an opportunity to be a buyer potentially if they are going to slow that rate hiking pace. Because right now, 75 basis point is a pretty aggressive, or it's a pretty hawkish stance. But technical levels are technical levels. If you look at options, though, big investors are still paying premiums to pile into calls. I'm not sure positioning matches sentiment right now. Well, they could be selling calls. So you'll see the open interest. That doesn't mean that they're purchasing that premium. They could be selling that premium, or they could be hedging risk. There's a number of strategies that people will deploy using options. So just because the open interest is high on calls, it does not always mean that that is a bullish sentiment. All right? Simply because those calls could be being sold. They could be selling premium, because selling premium it's a very high hit rate strategy. So selling calls, $3,900. As long as price remains under $3,900, they will get that premium. I'm going to download Thinkorswim, and I'll put it on this computer so that way I can pull it up during live streams and stuff. I just haven't done it yet, but yeah, I mean, just because there's a lot of open interest in the calls, it does not always guarantee that has any kind of bullish sentiment at all. They could be selling calls. They could take a short position, sell the underlying asset, and then sell calls at the same price. That's like a double short. And you would still see that tick on open interest. You know what I'm saying? So yeah. Can you look at AYEN? Yeah, why not? AYEN. It looks like, I don't know if that means energy or not. I have no clue. But the asset itself looks decent. It's in a bull market. I mean, it's rocking and rolling to the upside. You are coming into a bit of resistance now. It didn't really provide that. I mean, it did kind of, but not really. This is where I'd have been looking to be a buyer if I was going to buy the top and expect bullish continuation. Am I looking for this to roll over? I don't know. You'll have to see. Do the sellers stay here? Are they stepping up there? Because that is your resistance. You can see that's where you traded to, right? Right there. You also have a daily resistance under. So watch these two prices here. And if you don't close the daily above it, then maybe this ends up being a higher low. But you are bullish. You are structured bullish. Your trending indicators and momentum oscillators show you that you should be looking for bullish positions, not bearish ones. All right. To me, it looks like it's trying to break out again. Yeah, Heath, but tomorrow is non-farm payroll. Yeah, I know. Uncertainty. So this pump could just be faded. I know it can. Absolutely. It can. And what happened yesterday could be faded on non-farm. We just have to wait for price, see how the daily range structures itself, and then we will see if there is a tradable event there, right? As long as price structures itself to a degree where we can take a position on it, we will. And like I said, I do not care. I will short these markets to infinity if that's the way they want to go. If they want to go higher, I will buy them, right? We are going to usually be on the right side of the market, one way or the other. So whatever direction it wants to go, that's the direction we will look to take our entries. But yes, you are absolutely correct. Tomorrow could fade everything. Pump before uncertainty. How did you get in that short? What short, Trader John? How did I get into the short? I just took the entry there. Here, I'll show you again. It was, I naturally up here would have been the best overall position. On this wick right there, when this wick traded up to supply, that was the perfect short entry on the whole day's range. The perfect short. You couldn't have got any better than that. Because had you taken the short Here, you're literally taking a short against nothing, because this should have been, that's where it should have stopped. And it did here, here, and here. This was like a liquidation event, if you will. So you have to wait for that to occur first to show you that the sellers or that price is willing to trade away from the supply. So on this retest, that was the perfect entry. So when I came to the screen, this resistance was here. Okay. Let me go. Right there. That should give me enough data. So on this close, right here, right? There's 6 o'clock. So I come to the screens at 6. I am here at 6. So I get in here, I sit down, I see this. It's hourly res, right? So I'm short here. I don't remember if it was on this candle that I market ordered short or if it was on this candle that I market ordered short. I just know that that's resistance. Not because I say it's resistance. The market says it's resistance. It's an hourly close. That's resistance. And it will be resistance until you close an hourly above it. And if that would have happened, then I would have waited for a retest of supply, right? I would have been wrong. I would have been stopped out of my position if that what was going to happen. So my short entry is here. I'll tell you the exact price. 20311 spot 50. So my short entry is just a little bit under that resistance. Let me look on the Bitget exchange. Here, I'll just pull it over. Right here. There is my short entry. I have taken profits already. I have realized profits already. Return on investment there. All right, so I have realized profits already. So getting stopped out is okay, but it looks like I entered here. So if I take the hourly, pull up the hourly, you can see that on this asset, my entry is dead perfect, right? Dead perfect, dead on the resistance. You see? Yeah. And the account is up nicely. So I whittled that account down to nothing, and right now, as of today, it's setting at about $2,700. So, I mean, it's up big, up big from yesterday. Yesterday it was like 1400 when I started today. So I mean, I'll build it up continuously till it gets to about 15 grand, and I'll knock it back down to nothing and start all over again. It's just essentially how I'm operating until that pop-up window goes away. We are getting a nice spike on Bitcoin here. So yeah, we'll see how this ends up playing out. Yeah, that's like I said, guys, these levels, they're important, man. They're big technical levels. And like I said, also on your monthly range, man, you're early. You're early on the open. And these monthly candles operate the same way weekly candles do, the same way daily candles do. The high or low will be in, within the first week and a half of the monthly range. Not always, but typically, right? More than it doesn't. So the first week sets either the high or low of the month. up into the second week, right? Because in August, the month of August, the high didn't get set until there was halfway through. So it was exactly, or on the 15th day of the month, you set the high of the month. Here, you set this was your August high. And look, Monday, the 15th of August, you set the monthly high. We were operating as longs, expecting the monthly low to be in. So naturally, any long positions that we got in at the beginning of August, because here's your opening, here's your monthly open, right? So we looked at these 4 bearish days here as a buying opportunity based solely on the monthly range and where we were in retrospect to that, right? So we looked at this as a buying opportunity. Then if you weren't looking at it as a buying opportunity, on this day here, when you closed like that, you should have been a buyer on this day. Or anytime you got to retest the supply, you should have been a buyer. I mean, that's telling you right there. That one day told me everything I needed to know. Yeah, I'm looking for longs, expecting this to be the low of the month. But what happened was we traded up, set a high of the month on the 15th day, and then spent the rest of the month getting hammerfied, getting pounded into minced meat. So it doesn't always happen like that, but it does often. Here we are, the 31st. What is this? Tuesday the 1st, 2nd, the 3rd. So, the first motion is usually the fake out motion. Usually, not always, but usually. So getting long here is based on it's a technical level. It's objective support, not subjective support. It's objective support. And it's also the beginning of the month. Boom, boom. So even though we are so freaking bearish out there right now, and getting long is the contrarian trade, you have a technical reason to do it. Or did. Not now. Now you're up off of the level, but when you came into it, you did have a technical reason to buy it. So we'll see what happens. I want to keep the daily open up there because that's pretty good. A close above that is on an hourly closing basis would be fantastic. But sellers are going to try to rejoin right here. That's going to be looked at as a supply candle. I would not take that short, never in a million years, because it's 10 o'clock after my window of operation. I look for entries from 7-ish, 6 to 10. Anything after 10 is chop city. Choppity chop chop choppy. All right. What is your process to determine if a support will hold or not? What do you look for? I watch it on a smaller time frame. If I'm looking at the objective daily close, then I want to see how do hourlies close in and around that level. If it's showing me the ability to trade away from the level, then I know that I want to look for entries as close or as possible to that. But there is nothing in the world that will confirm if a level is going to hold as support or not. Only time will show you if it is or not, right? Only time will show you if it's going to hold or not. Nothing in there is no little trick that I can tell you that will guarantee a support or a resistance hold. Nothing at all. Because we can't see into the future. So we don't know what price is going to do. But the longer you do this stuff, man, the longer you do this, I laugh at all those macro guys that say that there is no edge in day trading. There is no edge in looking at candlesticks. I laugh at them. I absolutely I adore them. I think they're cute. I could say the same for there, right? There is no edge in macro analysis simply because you can't see into the future, right? No, there is an edge, but you just got to sharpen it. You got to build that edge, then you sharpen it, right? Once you have an edge, then you sharpen it. And then you hit that bitch hard as hell until it quits working. There's still going to be a lot in it naturally. Like there's a lot of stuff that you need to learn to be a good price action analyst or to be what I've been called a candlestick whisperer. You got it just takes time to develop that experience, right? Like people ask me all the time, how did you know this was going to work? I didn't know it was going to work. Yeah, but your entries are so good all the time, constantly. How did you do that? Just time, just experience, just, you know what I'm saying? Just looking at the charts, understanding how price moves, what it's looking for, what it does. You will get that over time. I promise you. You looking at candlesticks as long as I have, then you're going to have the same experience as I do, right? The exact same experience. There is an old proverb that says it takes 10,000 hours to become a master of something. 10,000 hours. It sounds like forever, but it is possible, right? And you will be a master at it. If you've been, learning the right stuff, you can absolutely learn the wrong stuff and still be crappy at it, but you would still be better than you were at the beginning. I guarantee it. I stick with my rules and my strategy most of the time. Like, I'm done trading for the day, right? I'm not going to take any new entries. I took the short here, took profits there, then I got long here and took profits there. All right? And if you don't believe me, I can pull this over and show you. There's the long entry right there. It's not the perfect entry. It's not the low tick, but it is an entry right there. Okay? So you can operate like that too. The only reason I bought it is because I would never do that on a normal day. Like I'm not going to take a short on a position and then close out that position or leave the unrealized P&L on the table and then get long expecting something to happen. No. The reason I did it today is because you are at monthly demand. Like I'm trying to position myself for the low of the month. The low of the month. I don't know that I'm going to catch the low of the month, but I know because of my strategy that that's what I do. That's what I do, right? I have to do it even if everybody is extremely bearish, even if the news is extremely bearish. I have to take that position because it is a technical setup. So I did. I did not know that it was going to work. And there is no confirmation. This still, even though it looks really good now, it still doesn't mean that this is going to work. At 12 o'clock, this thing, some other bearish news could come out and you could be trading at 19,990 by the end of the day. So I have no idea if it's going to work. I know what I'm supposed to do. I'm a trader. This is what I do day in and day out, right? Every day. And I have been doing it every day for a long, long time. You will get that good at analyzing price if you use the fundamental basic things that I'm teaching you on this channel. You will be just as good as me. I am not a super brilliant individual. I have a decent IQ, but over the years of being an alcoholic and a few other things, I've lost many brain cells. Sometimes I have difficulties just pulling a word out of my cobwebbed head. So if I can do it, you can too. Trust me. If you have any semblance of intelligence, you will be able to do it. It's the risk management aspect that most people fail to understand. That's where they become failures at. learning this strategy and understanding the principles of a candlestick, how it operates, what it typically does. Once you know all that, and you got your other markets that you're watching as well, to essentially just keep you in line or in step or in tune with the market, the overall marketplace, right? You will start to understand it. You will understand that I am only supposed to look for positions at this time, right? And at these areas on the chart. And that's it. If it's not there, you don't trade. If it is, you do. It's that simple. You just got to understand the fact that risk is so crucial because, like I said, and if you're using a lot of leverage, because most people do, most people use a ton of leverage because they are trying their hardest to make money. They're approaching it they're approaching it wrong. I'm also up so big on the week that, I can afford to take that secondary risk of trying to buy that monthly low if it ends up being the monthly low, right? That also has a lot to do with it. I'm already up astonishingly big on the week. So I can afford to take that little risk there to see if I'm right. And that's basically all trading is. That's like that sentence boils the whole aspect down. I am willing to risk a little bit of money at a specific time, at a specific level, to see if in the future I will be right. And that's how you have to approach this. You just have to. Risk is important, the most important. I placed a trade on Swiss yen and it pushed through thinking support would have held. So let's go take a look at Swiss yen. What time is it? All right, we can go on an hour and a half, a little over an hour. We'll give it a little bit more time and then I got to bounce because I'm starving. All right, so you didn't tell me where, so I'm going to try to, I placed a trade on Swiss franc and it pushed through thinking support would have held. All right, so let me go find a support. So here's support. First and foremost. Yeah, there's a support there probably. You was maybe looking at that one. And it did push through. So I just don't know what support you were looking at. Here's your daily range, the whole range and nothing but the range. Right here. So, I mean, naturally you should have been, all right, especially coming into the New York session. I'm assuming you were a buyer. You shouldn't have been. And I'll tell you why right here. Let me just get this box dark enough so we can see it. Here's the reason why you shouldn't have been a buyer during the New York session, which is from 6 to 10 all the way to now, right? London, the daily open is 8 o'clock a.m. Eastern Standard Time, or p.m., sorry, 8 p.m. Eastern Standard Time. That happens at night. That's when your new daily candle opens, okay? So there's the opening price of the day right there. And it happened under that daily support, first and foremost. Second, you tested daily support and rejected. Yesterday was a down day, was it not? It was. There's your daily high. There's your daily low. You closed under the midpoint, so you were bearish on the day. Here's your open right there. Right there. So a close under that means you're bearish on the day. Today, order flow stayed with the same trend. You had your open, you pushed up, set a high of day, immediately broke down. This candle took out intraday support, which was here. This candle did. Boom. And it did it on a good standard, right? The midpoint is roughly about where support would have been, right? So that means that is a legit breakdown. Then you have a pullback of sort, a small little pullback, testing the midpoint of the breakdown candle, maybe, and then price trades away. London session, open, right here. London open. What do you get? Continuation from the open of the Asian session, down. You should not have been looking to be a buyer on this asset today. And to be honest with you, this is where you were at 6 o'clock in the morning. So that means this low wasn't in yet. That means you were trading at the low of day when you came to the computer, or when I came to the computer. This asset was trading at the low of day. I cannot take a sell entry at the low of day. I just can't, because there's no guarantee that it's going to make a new low. You shouldn't have, this should have been a pass. This should not have even been on your radar for a setup. Now, if you still want to be a buyer because of weekly support here, let me show you again, weekly support, then you need to give it a few days to see if support does build in here. A couple days. It's almost the end of the week, so I would go ahead and say wait until Monday to see, did this support hold? If it did, then you can potentially look for higher low support to be a buyer. But this should have been a scratch. This should have been a walk. I could have looked at this chart and in 5 seconds known right off the bat, this is not a setup. And you will get that way as well in time. With experience and time, you will start to understand the stuff, and you would have known right off the bat that there's not even a trade here. You don't want to be a buyer on the first test of any level, especially if you got momentum. I mean, the Asian session was bearish. The London session was bearish. That's a pretty good indicator that the New York session is likely going to be bearish unless something changes, unless the news comes in. People will still look to sell this. It's going to come right back up into the point of control. People are going to look to sell it into resistance. They're going to think that it's going to keep going lower. And it might. But next week, see how does this thing close under it? That's another thing, right? If this weekly candle closes under support, then that means that it didn't hold. And then you definitely don't want to be looking for longs. All right? So hopefully that helps. But yeah, you should have passed that. That's not a setup. Not everything is a setup. Sometimes there is no setup to take in FX. Like I said, sometimes the London session was the setup. And if that's the case, then, sometimes in New York, you just won't get to trade. Or not on that asset. Maybe another asset you can, but not that one. So hopefully that helps you. I'm driving from Cape Cod to Philadelphia for World Series game tonight. Nice. Question, are you still accumulating? Yes. Yes, I am. And do you still hold a court position? I'm not sure which core position, probably. He's typing on a cell phone while driving. That should be illegal. I'm just kidding. It is illegal in most states. Yes, sir. I accumulate, I have taken profits off the Bitget exchange and put them onto cold storage. So I still own the Bitcoin. They're just not on exchange. I have multiple cold storage wallets, and I do have a little bit on Coinbase's exchange, but my core HODL position is on cold storage. It is not hooked up to the internet. Okay? So yes, when I'm trading the inverse swap contract, all the profits that I accumulate, I then take off exchange and put into cold storage. Yes. I use the fiat currency, the US dollar, to pay my bills. I get that from FX and stocks. I don't buy Bitcoin. I just trade it and accumulate it that way. So yes, to answer your question, I do have a core position. Bad microphone. It's with an H. Gotcha. Yeah, I kind of figured out what's going on. Great info on shorting position. Can you check SPX? Yeah, it's We'll just pull it over here. It's down big on the day. It's not real big. It's not even down a whole percent now, but it's down on the week. And we took out last week's low today. So not exactly what you want to see for bullish continuation. But you are getting a slight bounce, right? It's a very bad day. It's a bad day across all asset classes. Bitcoin is currently up on the day because that's your open. So, I mean, it looks better than the S&P 500. It's still bearish on the day, but that's your bullish week, right? That strong week. So, potentially what we have here is last week's bullish candle is a trap. You have taken out the low of it. Will that trap hold? Maybe. Is there a setup to take? Not really, because this is not I mean, it is technically a supply candle because it's the breakout, but I don't like using big range candles as supply. I just don't. So there's really not a setup here. What I would probably do moving forward, if that candle is going to be a trap, you could watch for potential short entries back up to daily support, old daily support, which is there. It's going to be above yesterday's or today's open. So depending on where this thing closes today, might be a short setup tomorrow morning during NFP. If you get a spike back up to here, you would have taken out yesterday's high, and that's a good area to look for liquidity or a liquidity break trade nonetheless, right? But since we took out this low, that means this entire bullish move could potentially be a trap moving forward. And if it is, then you will be looking for shorts for downside continuation. If it was just a liquidity run below the low, then this day needs to close well above this, well above it, because that's a pretty decent spike under that liquidation. And typically a liquidity run doesn't build in as resistance and then drop. A liquidity run is simple. You just go boom and then you back up, right? That's a liquidity run. Like this right here, boom, you took out that swing low and up. This isn't really a liquidity run on last week's low. So we'll see how today closes. Today's close will be important moving forward. A bullish closing day will have me saying, well, maybe then it might still be able to hold a support because you do have something right there. You see what I'm saying? Like technically, you do have a demand zone right there. Just because it's under the weekly low doesn't typically mean anything just yet. But as of right now, you have a potential trap going on the weekly time frame. So let's see if it closes above or below this demand zone, and that'll give us, potential positions for tomorrow, or at the very least, we'll have a trade idea on the SPX. Should you hold or else new lows? I don't know what you mean by that. Andrew just said that SPX is in the daily demand. See, so Andrew is picking stuff up. Fantastic job. Typically, you would have wanted to be short coming into that. Don't necessarily want to be a buyer at it. However, the trend is broken, right? This uptrend that you did have is broken. So, if anything, this bounce is a profit-taking bounce. Because yesterday you broke down below your uptrend. So now sentiment is bearish moving forward. So what we'll look for moving forward is for that sentiment to remain. This will be a profit-taking bounce only. And if that is the case, that is what's going on here too. It's just a profit-taking bounce. So there still might be a short setup on Bitcoin tomorrow morning. But that will all determine on how these things close today. If this closes green, it'll look less like a profit-taking bounce and more like a buying opportunity. And then wherever it closes, that will typically be support moving forward if it turns into that. If it closes bearish on the day, we will be looking for short entries tomorrow. That's just how we roll, right? We have to do what price says to do. And right now, price says you're broken down. You have broken down. Why is nobody talking about this Fed rumor? Garbage. CNBC, rather big deal. Bloomberg did discuss it briefly. They want the Fed members to shut up. They only want Powell to speak. So when you get rumors or hear other Fed members coming out with rumors that we're probably going to, not hike and all this stuff, it is just that. You can only take it as a speculative rumor. And we did, right? That speculative rumor gave us an opportunity to get long. All of last week, we were long. We nailed last week's low. We nailed it almost to perfection. So last week was a very profitable week for us also because of that rumor. But it was just that, a rumor. Fed cleared that up yesterday. He cleared that up yesterday. So people could still buy this naturally. But, the overwhelming sentiment out there is bearish. If you lived in Europe, how would you trade London differently than New York, especially with Bitcoin? Well, your 9 o'clock in the morning is our 9 o'clock in the morning. It's not the same time, but if I ain't mistaken, when it's 2 o'clock a.m. here for me, it's like 8 or 9 a.m. there for you. So you would be awake for the London session open. You would be up and awake already. You trade it the same exact way as you trade New York session. You're already up. You're watching price. You don't want to be a buyer at the high of day in the London session. You don't want to be a seller at the low of day in the London session. You want to be opposite. You want to be looking for bids at the lows or look for sells at the highs, because the London session oftentimes calls the lower high day. So that gives you the perfect opportunity to nail highs of days and lows of days, right? But yeah, I mean, I don't quite understand the question. Hopefully I answered it for you good enough. Markets stay irrational longer than you can stay solvent. For sure. That is a 100% guaranteed fact of life. Yes, you will run out of money, especially if there is leverage attached to the position. If that position has leverage on it, you will lose more than in your account. Most brokerages and exchange nowadays have technologies built into place to stop you out and liquidate your account at a 70% loss. So when you hit 70% losses, the exchange automatically liquidates not only your position, but also your account. Okay? That's very important for you to understand. At a 70% loss, the exchange will liquidate your position and account, depending on how much leverage you have. Usually you will get a text or an email that says, yo, you are approaching a 70% loss. So since that tool is in place, that has stopped a lot of margin calls, or that is still a margin call in a sense, but you don't owe them money. It's those flash crashes where their system didn't catch it in time, which is possible to happen even now. And then you're going to see your account being negative, 20, 15, 20 grand. That means you now have to put 15 or 20 grand into the exchange just to get back to zero, just to break even on the zero. Yeah, you don't want to owe the exchange money because they're not a bank. They're not loaning you that money. They're not going to let you pay that back in what do you call it, monthly installments. They want that money now, right now. So trading with very great deal of leverage is a very risky proposition, especially if you don't know what you're doing. I suggest you do not do it until you understand what you're looking for, how the position windows work, all that stuff. Then you can start trading with leverage and nailing fantastic entries and making money. But before that happens, you need to be very careful. At 70%, depending on leverage or the leverage you have open, they will liquidate you. Totally. It has happened to me. It's happened to me. So yeah. Bye Heath. Heather, can you also help me on daily basis? Yeah, I mean, I have a Discord. I don't do private lessons because my time is too valuable to even put a cost on something like that. But I do have a private Discord, and everybody in there has the ability to ask me questions 24/7, and I do answer them, and it's less than $1 a day. It's in the Discord. There's a link in the description, and also I always, if you just go to my videos, there's a pinned comment in most of the newer videos that has the access to the Bitget link, as well as to the Patreon, where you will find the Discord access. But I can absolutely help you with trading 100%. I have full-blown conversations with candlesticks. I do. I'm trying to interpret what they are telling me, and I'm not always right. That interpretation, there's room for error in interpretation, right? So, but overall, I do pretty good. Tell him everything. What? I don't. They tell him everything. Oh, gotcha. Heath, can you also help me on a daily basis? Oh, yeah, I just answered that. That's the only way I can, really, is if you're in the Discord. I'm very active in the Discord every morning, and then, my activeness will decline throughout the day. But if there's a question asked, I will get to it as soon as I can. I have answered to date every single question that has ever been directed at me in private messages. If you ask me a question in a main chat room, I might not get the alert. And if I don't get that alert, then I won't know that you asked me a question. So if it's an important question, just DM me and I will answer it. That's all you can do, right? You watch me every single day. We discuss trade ideas, the community. They're all like-minded in there. They're all looking for different things. They all have their different plans in place. But anytime there's any questions asked directed at me, I do answer them, and I throw up study charts and things like that to help you along, right? The study charts are invaluable. Those things, you could just look at them all day long and start to get an idea of what you're looking for. Riot is 44% short BTC miner stock, 0 shares available to short, and Bitcoin is starting to pump. Yeah, I don't know if I would read into that too much, but we'll go look at it. Yeah, if Bitcoin pumps, Riot will too. 0 shares to short. That's only on specific brokerages. Other exchanges, other brokerages probably have shares to short. Your broker probably does not right now. Because usually I think there are shares. I think this is a shortable asset, meaning that most brokers do have access to short shares, but not all of them and not all of the time. So if that is what is going on here, that there are no shorts available for any broker, then technically there's only one way it can go. Not necessarily. I mean, you could still have these people that are holding long positions sell. Like that's basically, when it goes on short sell restriction, it'll still go down and down and down because positions are getting liquidated automatically by exchanges. And you also have just natural selling, people selling long positions that they've been holding for a long time, right? So that can still hold price down. You're getting a bounce right now because the S&P 500 is bouncing. The dollar is having a pullback, right? It's having a slight pullback up here. You came into weekly resistance. This is weekly resistance. We always revert back to the original resistance whenever there is a trap. So this is a breakout above resistance here. But since this candle took out the low, it made that candle a trap. So we don't look at this candle's resistance. We look at this one. And you can see how you've traded up to it. And now the sellers are sticking up, or they're coming back there. It's not a massive pullback. And I don't know why there's a trend line there. Oh, that was the trend until this breakdown here. So let's just get rid of that. I don't know if sellers will show back up here. Only time will tell, right? Only time will tell. But I would like to see prices fall from here because I'm short dollar on the USD JPY. And, yeah. So we'd like to see it fall. All right, you guys, we're going to go ahead and wrap it up. I shorted Bitcoin at $20,319. Nice job. $20,300. Yeah, that's not bad. That's my entry this morning was $20,311. So, I mean, you took essentially the same position I did. That is not bad. You did good. You did great. That position has probably been stopped out if you took profits and moved your stop, but that's okay, right? It's okay. The money was already made. That's the important part. You already got paid for that trade. So we don't really care if the unrealized P&L gets stopped out or not. We don't really care. But you are coming back up into resistance here. Like that can act as resistance. And the S&P 500's got a little bit more room to go before it finds resistance. But that's a nice bounce. I ain't even going to lie. That is a nice bounce. So let's see how it closes out today. Tomorrow's NFP, so we will be going live 30 minutes before. We'll be going live at 8 a.m. That will be a full hour earlier than we went live today. All right? And I will see you all first thing in the morning, and we'll see if there's a setup available or not. If there is, we will take it like always. You guys make sure you trade safe, make sure you trade smart, and as always, happy trading, everybody. And thank you all for being here all the time. I appreciate it so much. We'll see you tomorrow morning.